This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Still hot labor market. UK wages rise more than expected in the latest reading, keeping pressure on for higher interest rates. The data equaled the highest level on record last month and in 2021. More work to do. Fed officials say higher rates are needed to bring down inflation to 2%. Barr, Daly, and Mester all call for additional hikes this year, while Bostic says be patient. And NATO Summit is in full swing over in Lithuania. Sweden wins its final backing needed from Turkey to join the alliance. Welcome to Bloomberg Surveillance. It's the early edition. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, the future session really is struggling to hold in to those very slight gains put in yesterday.
It is. What's interesting, though, is it's coming off of an Asian session that was a lot of green on the screen, mostly coming from this idea of stimulus in the Chinese property market. But what's interesting, Dani, is it's not having a real read-through into the session, at least into the U.S. session, I imagine the European session as well. Futures, we're looking at kind of virtually unchanged right now, but tilting to the downside. You are seeing sentiment sour even in just the last 30 minutes or so. Futures at about 44.41 when you look at those contracts for our radio audience. The bond market gets interesting, though, because that two-year yield really pulling back. A lot of this was yesterday, but still worth checking in on. 483, pulling really far back from that round number of 5%, down about 2 basis points. As that front end of the curve retreats, though, you do start to see the dollar take its cue, down about 0.2%. Now, ordinarily, the dollar movement lately has been a function of what's happening in the euro and the cable rate, even arguably the Mexican peso and a lot of the commodity exposed currencies. Not today. We're going right back to the bond market story, which makes the commodity story even more interesting, because if you're starting to see a bond market price in more recessionary risks, perhaps, of pricing in a Federal Reserve that may need to reevaluate cutting rates despite some of the rhetoric that you are hearing from those government officials, the commodity index tell you something very different. Gold, copper, oil, all higher on the day, Dani. The index higher by 0.4%.
Kriti, I want to bring us some breaking lines over the Germany ZEW survey coming in for July. It's an interesting one. So current expectations or current conditions actually did better than expected, still much lower, but not as bad as we thought it would be. However, expectations going forward in the ZEW survey is worse than expected. That came in at a negative 14.7. The estimate was for a negative 10.7. So that's not great news, and we didn't expect it to be good news considering that Germany did fall into a recession in the winter. We had that official data come through. Now, when it comes to this equity trade, it is very spotty throughout Europe. You have the UK doing really poorly, down 0.4%. CAC that's up 0.4%. Kriti, you mentioned China. This is where we're seeing it come through. It makes sense that you would see some more spots of it come through in the European session. For example, LVMH, all those luxury goods live in France. Those are getting a boost. Hence, the CAC is doing better than the overall index. Now, the other area we're seeing that China story play through, if we can switch it up, is on basic resource stocks. We are seeing basic resources in general, the actual commodities, do better today. So the companies that are tied to it, the miners, even construction companies, those are outperforming today. So basic resources, the best performing sector in the European trade, that's up nearly 1%. Meanwhile, we're going to talk to our Lizzie Burden in just a moment about UK data that came in. So I'm not going to go too much in it, but overall, UK two-year yields, they're lower by 4 basis points. They're doing kind of the opposite of what you might expect, because that data did show wages at a still uncomfortably high level. Meanwhile, the Swissy gains versus the dollar, it's at its strongest level versus the dollar since 2021. It's not just, Kriti, a strong dollar overall. It's partially that, but it's also because Sweden has seen lower rates of inflation. So Switzerland, rather, is seeing lower rates of inflation. So that is playing into this currency pair, seemingly in free fall. It continues to drop as we look at a CPI report on its way for the U.S. tomorrow, Kriti.
Yeah, well, let's go from the Switzerland story right back to the UK. You mentioned it. We did get that employment data. Wages growing way faster than expected, hitting record high levels in the 3 months to May. Joining us now to break it all down, Bloomberg's Lizzie Burden. Lizzie, walk us through the employment story in the UK.
Well, it's a mixed picture, Kriti, because you did have unemployment unexpectedly ticking up. It was expected to hold steady. But also, as you mentioned, the wage growth growing as well, past expectations. So you can see what the market is focused on. The pound's been trading up at $1.29, the highest level since April 2022. And it's still flirting with that level now. Traders pricing another 150 basis points of BOE hikes by March. That would take rates to 6.5%. So they're really honing in on the wage story. The Bank of England Governor Andrew Bailey himself has said that this is a level that is fueling inflation. Now, even if you were to tell me that that was cherry picking from the data, I would put to you the analysis from our chief Europe economist, Jamie Rush. He says, look at the unemployment numbers more deeply, and it's actually more representative of people coming back to the workforce to look for jobs rather than people falling out of jobs, and therefore it's not representative of some sort of big loosening in the labour market, which would otherwise have been a relief for the Bank of England. So when it comes to the August meeting, 50 basis points very much still on the table, following up from that last jumbo hike. But we wait for the next CPI print to really confirm which way they're going to go.
You mentioned, Lizzie, that Andrew Bailey spoke on wages. He was at Mansion House yesterday calling for restraint. I want to just take a listen to that.
The interaction of above-target headline inflation with labour market tightness and demand pressure in the economy has made underlying developments in goods and services price inflation more sticky than was previously expected. And both price and wage increases at current rates are not consistent with the inflation target. Some of that tightening is still to come through the policy pipeline, and we expect underlying inflationary pressures to recede as headline inflation falls.
Inflation is still too sticky, but it's going to fall. What was your takeaway from that?
So Andrew Bailey very keen to reinforce the message there that inflation is going to fall markedly this year. The jobs data this morning maybe suggesting otherwise. But also we heard from the Chancellor, Jeremy Hunt, and the major announcement from him, which I must say Bloomberg had its eyes on beforehand, was about pension providers, that they're going to allocate 5% of their assets in default funds to unlisted stocks by 2030. That's 9 of the UK's biggest pension providers. And what I think is interesting is that this investment doesn't have to be in UK assets. Rather, the emphasis is on the benefit to pension savers. And Jeremy Hunt says that that could be £1,000 a year once people retire. We were also speaking to the Lord Mayor of London, Nicholas Lyons, on Bloomberg TV earlier. I know on Bloomberg Radio earlier. I know he was also on Bloomberg TV. But he was emphasising that this is not mandatory. And the way he put it is that that's the British way of doing things, to encourage rather than to force.
Is that the British way of doing things? So much to dive into.
Passive-aggressively encourage, Kriti. That's the British way.
I'm learning so much. Lizzie Burden in London, always a great teacher. Thank you. The BOE wasn't the only central bank action we got yesterday. 3 Fed officials said interest rates will have to be hiked further this year to bring inflation back to the 2% goal.
My view is that the funds rate will need to move up somewhat further from its current level and then hold there for a while as we accumulate more information on how the economy is evolving.
That's part of positioning ourselves so that we can try and get to that target level in a careful way.
One of the surprising things about the economy is just how much momentum it continues to have. We're likely to need a couple more rate hikes over the course of this year.
Joining us now is Bloomberg's Jill Deeses. Jill, what kind of clues are we getting about just how much tighter policy is getting this year? Is there really any kind of roadmap, any indication here?
Yeah, I mean, and I think you got this a little bit from the Fed's dot plot, right? But ultimately what you're seeing is more of these Fed officials really hammering home the point that we've seen Jay Powell make time and time again, which is that the Fed hiking cycle isn't over. The June pause was not the end of this cycle. I think that at this point, we're pretty much all but certain to see a hike later this month. And then ultimately the dot plot did show something, later this year as well. And that's kind of the feed through that we're getting from these types of comments. Now, of course, we're all looking ahead to that CPI print coming Wednesday. I think Bloomberg estimates have a 5% year-on-year gain, 0.4% month-on-month. So inflation still continues to be sticky. And what these guys are all trying to drive home is like, look, inflation continues to be a problem. We still think we have a little bit of room to continue to hike here. And ultimately, yes, I think that at this point, it really does have that feeling of certainty to it.
Jill, we also heard from Fed Vice Chair Michael Barr yesterday. It was literally like a love letter to capital requirements, talking about the beauty of capital to absorb losses no matter what it's from. What exactly did he introduce in terms of new capital requirements for American banks?
Right. Well, I think that at this point, Michael Barr, he ultimately is coming in here and saying, look, there needs to be more oversight. There needs to be more standardization of requirements for reporting capital and for reporting trading, operational requirements. I think that we've kind of known that he was going to be a bit more tough on regulation since he came in last year. And then as a result of that, you're going to see an increase in capital requirements for a lot of banks. What the Fed has said over and over, especially in the last couple of months, is that this is something that would likely affect, I think, the 8 largest banks more than it would affect some of the regional banks. That was certainly a concern. And this is also an issue that while we've been talking about capital requirements and oversight and standardization for years now since the financial crisis, this is something that's gained a lot of renewed attention within the last several months, particularly after the SVB collapse earlier this year. And I think that's certainly factored into some of the politicization of this issue. I think what will be interesting to see is we've got some big banking earnings coming up. I think JP Morgan, Wells Fargo, Citigroup in the coming days. More of the reaction to Michael Barr talking about these things is going to be one to look out for.
Yep, you nailed it, all those 3 before the bell on Friday. Jill, thank you so much. That is Jill Desis from Hong Kong on the latest on Fed Speak. Now to NATO. Turkey has agreed to support Sweden's bid to join NATO in a major breakthrough for the military alliance. Secretary General Jens Stoltenberg welcomed the about turn following months of drawn-out negotiations.
Completing Sweden's accession to NATO is an historic step that benefits the security of all NATO allies at this critical time. It makes us all stronger and safer.
Now, that news came even before the NATO summit started. It's a 2-day event. It kicked off this morning in Lithuania, bringing together 31 leaders from across the organization. Joining us now is Rosalind Matheson, managing editor for International Government. Roz, again, so much has happened, and this was all even before the event started. Why did Turkey have this about face and agree to support Sweden's admission to NATO?
Well, as you say, it was very last minute after months and months of Turkey saying, no, we're not going to agree to do this. And there's a number of reasons potentially for that. One is that there are signs that perhaps the European Union is willing to have some sort of low-level conversation with Turkey about potentially joining the EU. That's been something that Erdogan has aspired to for many, many years. It is very, very difficult, but at least there are signs they're willing to have sort of some conversation about it, which is sort of a gesture to him in a way. Also, he recently won re-election, so he's very secure at home. This was something he could use during the campaign to play to his base to get voters on board. Now he's got that. He can afford in a way to be magnanimous, to show that he's willing to consider this, of course. And the big one on the table is that the US may finally agree to sell Turkey these F-16 fighter aircraft. They've been trying for them for ages. It's been held up for many, many months. It seems like the US President Joe Biden is going to meet President Erdogan today in Lithuania and have a proper conversation about how now to get that through.
Yeah, the defense piece of the equation crucial to that, as also as it is crucial to the future of NATO. Roz, walk us through the implications of what this means long term.
Well, for NATO, of course, this enlargement is crucial. You can see that with the addition of Finland and Sweden, you've got a ring around Russia, essentially, in sort of going into the Arctic Circle, the northern part of Europe. Very, very much going to make it harder for Russia to sort of expand its military presence there. That was a vulnerable part of NATO, potentially, in that Nordic region. So you've got Finland and Sweden likely both joining, and that sort of completes the circle in a way for NATO. And it presents that idea that NATO is a united front, very much a defensive alliance, and, you know, something that can counter Russia for years to come.
Will definitely be interesting to hear what the conversation is around Ukrainian future admission to NATO, too, as the summit goes on. Roz, thank you so much for joining us. That's Rosalind Matheson, Bloomberg managing editor for International Government. Coming up, the NATO summit kicks off, as we've been discussing, and we're going to be on the ground speaking to the president of Finland. And we're also going to be speaking to Matt Maley, chief market strategist at Miller Tabak, later this hour. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Dani Berger in London. Look, all the rage in the stock market has really been concentrated in those tech stocks. But let's put some numbers on it, on exactly how much of the contribution has come from what we're calling now, I guess, the Magnificent Seven. Of course, NVIDIA taking the top of the list, a 17% contribution to those year-to-date gains. At the bottom of the pack is Alphabet, of course, higher by about 6.4%, contributing about 6.4% year-to-date gains. Again, going halfway into the year, even 6.4% is a lot, and that is the smallest of the pack. Let's put this into a little bit more perspective for our radio audience. Stick with me here. I'm going to show you a terminal chart. You can find it on GTV Go on your Bloomberg terminal. But if you look at the NASDAQ 100, of course, this tech-heavy focused index, and then you compare it to what you're seeing in those Magnificent Seven stocks, you named it, NVIDIA, Amazon, Apple, the likes, you see this massive outperformance with those tech names relative to even the NASDAQ 100, which already has that tech-heavy inclination. What's interesting, though, is a lot of people are saying this is the reason the rally is not sustainable because it's so concentrated. The bulls would argue, well, it's backed by real money. Let's see which side of the equation Bloomberg Markets reporter Justina Lee stands on. She joins us now. Justina, walk us through this. The bull and the bear case both have, I have to say, some pretty valid points. What are we missing here?
Yeah, exactly. I think from the bulls' perspective, this totally reflects, the secular trend of the focus on AI and technological advancements again. And also at the same time, a lot of these big tech companies at this point are so entrenched in our lives that they might be less dependent on cyclical growth. But I think if you look at it from the other perspective, given how far this rally has gone and how stretched their valuations have become, at this point, they really have to deliver on those earnings in order to kind of justify those valuations. And indeed, we have kind of seen a little bit of a reversal. I mean, all this year, we've seen kind of capitalization-weighted S&P 500, like all the biggest stocks lead the rally. But this has changed a little bit, and I think it also might be tied to continued concerns about tighter monetary policy. Like at this point, with rates still probably going up, I mean, can you really justify those multiples?
Justina, you've been doing a lot of work on what's happening with MiFID right now, and it's especially relevant because we heard from Jeremy Hunt, the UK Chancellor, at Mansion House last night, talking about reforms he wanted to bring to financial markets to get people back to the UK. So for MiFID, we've had both this U-turn, as you and the team have been reporting, on unbundling research from banking, for not getting free research, essentially. If they U-turn on that, first of all, why? Why do the U-turn here? I mean, MiFID, we've been trying to enforce this thing for a few years now, 5 years or so, 6 years even.
Yeah, it's pretty crazy because a few years ago I was writing about the impact of MiFID, and now we're looking at the opposite. I mean, what MiFID tried to do was to force fund managers to pay for research and trading separately. But what seems to have happened is that really shrank research coverage, because when you have to pay for something, you might think about whether you actually need it. And the concern of EU and UK officials here is that has in turn weakened liquidity in the markets and maybe made it harder for SMEs to raise money. So now they're looking to reverse that. But I think it really is an open question whether that will have any practical impact, because at this point MiFID is so ingrained that it's really changed a lot of practices. People are looking at research costs separately. A lot of fund managers took it upon themselves to pay for that research and now are finding it hard to add back that expense to clients. So it remains to be seen whether that really will make a difference.
Wow, you make everyone make this change and then you return and make them undo it. It's quite the doozy. Justina, thank you so much for joining us today. That's Bloomberg's Justina Lee. And for more market analysis from Justina and the team, MLive Go is where you want to head on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A still hot labor market. UK wages rose more than expected in its latest reading, keeping the pressure on for higher interest rates. The data equaled the highest level on record last month and in 2021. More work to do. Fed officials say higher rates are needed to bring inflation down to 2%. Barr, Daly, and Mester all call for additional hikes this year, while Bostic says be patient. And the NATO Summit is in full swing over in Lithuania. Sweden wins its final backing needed from Turkey to join the alliance. I'm Kriti Gupta in New York with Dani Berger in London. A lot of geopolitics to digest, Dani, but I feel like the action still in the bond market. It's all about the eco data. It's all about the monetary policy.
It really is. I mean, we've heard from ECB speakers, from Fed speakers. There's been so many Fed speakers. We're about to get the blackout period, so that accounts for this deluge that we've gotten this week. Kriti, one interesting aspect, I think, to cover on this European market, and we're really going to see it when you bring us to the American board, is the outsized impact that China has on Europe, specifically Chinese growth. Now, that story hasn't really been in play at all this year, but we did get some signs of hope in today's session, early morning for Europe, overnight for the U.S., that Chinese authorities would be supporting the property sector more, and that ignited hope of more stimulus. That has really played through Chinese-sensitive stocks, the LVMHs, the French luxury goods. So overall, the European index is being brought up by those, up 0.25%. Basic resources, again, this is the China story, up more than 1%. In general, basic resources, the actual commodity themselves, are higher today. Meanwhile, the UK two-year yield is falling. We're buying the front end, matching what's happening in treasuries despite too hot wages coming in, wage growth at 7.3% in the UK. That was the data this morning, matching the high estimate we had last time around. And finally, the dollar in free fall versus the Swiss franc. Switzerland has a much more benign inflation picture. The Fed, as we heard from officials, still want to hike, Kriti. Weaker dollar versus the Swiss franc off the back of that.
Yeah, it's interesting that we talk about that weaker dollar and a positive story for the European markets, because it's starting to seep into the U.S. session. That was not the case about 30 minutes ago. Futures now marginally in the green. 44.45 is what we're looking at on those contracts. The bond market on the front end of the curve catching that additional bid. We're now down 3 basis points, 483 on the front end of the curve. You mentioned that dollar weakness. The yield story also pushing the green back lower. What's interesting is that the commodity index is higher broadly. Gold, copper, oil, it is all higher this morning. I wonder how much of that is simply a consequence of that weaker dollar that we were seeing. So some real ripple effects at a time when, of course, in the Asian session, you really saw some real outperformance coming off that Chinese property stimulus. I want to get to some of that earnings story, though, because, again, we're talking a lot about the bond market. We should mention earnings season does kick off on Friday as well with JP Morgan specifically. So there is a lot to digest on that front as well, which brings me to a chart. For our radio audience, stick with me here. We are looking at kind of how you navigate the market. This is essentially the Citigroup U.S. Earnings Revisions Index. This was essentially Dani's chart. I am taking over, but we are seeing earnings downgrades actually pick up. We're saying that that margin value, essentially, that has been powering a lot of these stocks, not just in the tech space, but broadly, may not hold enough water. And that's a warning that you're hearing from a lot of strategists, which is kind of creating this lower earnings outlook from a lot of the pros on Wall Street. Joining us now is Matt Maley, Chief Market Strategist over at Miller Tabak. Matt, is this a fair chart? Is this earnings outlook, this kind of doom and gloom that we're starting to see, in line with what you're hearing in the marketplace?
Yes, definitely, Kriti. And one of the things that, we have to kind of been pushed to the side in the last month or so is this whole thing with the regional bank crisis. It didn't create any systemic issues, but it is going to create economic issues. Whether it creates a recession or not, with the market as expensive as it is, it doesn't really matter, to be perfectly honest. With the market, like I said, if these earnings cannot come in a lot better, and that's going to be a lot harder to do with these banks pulling in their horns a little bit, we're going to seeing a certain amount of credit contraction. That's going to be tough for earnings to grow to the manner that we need in order to get the stock market to rally further from this expensive level.
Talk to us a little bit then about how you value something like that. I mean, historically speaking, when you see this much green on the screen in the front half of the stock market, the back half tends to follow. Why is this time different, and how do you even put a number on that from a valuation perspective?
Well, that is hard to do. There's no question. And you're absolutely right. The history says when the first half is good, the second half can be better, or is I mean, not necessarily as good, but certainly good and doesn't give back. Although we've certainly had some tough examples. I mean, I'm not saying we're going to have a repeat of 1987, but the 1987 ended up being okay, but we had a 30% decline in the middle of it. But more importantly, is that one of the reasons that the market really took off in the further in the first half of the year was this big injection of liquidity from the Federal Reserve and other central banks during this regional banking crisis, and that's starting starting to pull back. I mean, the good news is that we didn't have a major run on the banking system. We didn't have a major banking crisis. But now that liquidity is being pushed away, as we can see now with the Fed's balance sheet starting to shrink again, that gives us less fuel to really fire the kind of underlying rally that we would need to. Underlying growth in the economy that we would need for another good half in the second half of the year.
Matt, does a bear steepening in this yield curve bring concern to you? This is not a market pricing in cuts. This is a market expecting higher rates. I know it's not happening today, but it did happen to end the week last week. Is that a concerning development and change in this bond market?
Yes, Dani, I totally agree, because we're seeing that the 2-year note is up. Well, tested 5% last week and actually got above it for a short period of time. But the 10-year note is rising more quickly, so the yield curve is steepening. And most people might think, well, geez, that's really good, right? Because when the yield curve becomes inverted, that signals recession, and that's negative. So when the opposite happens, that must be positive, right? Well, actually, no. When you get and the yield curve becomes inverted, and you go all the way back to 1980, every single time that the yield curve has gone from an inverted situation to where it steepens back up into positive territory, that's actually when the worst of the market, the worst of the market turmoil takes place, and not just in the stock market, but in other markets as well. So again, we've only had a steepening here for a short time. This might be a little bit of a head fake, and we've had a few of those in the past. But if we see a significant steepening of the yield curve with the 10-year yield staying higher than or rising higher or staying higher than the 2-year, that's going to cause a problem for the marketplace, not be positive for markets. And it's something I think a lot of people don't really realize right now.
Yeah, a lot to digest on the market front. Matt Maley of Miller Tabak, always a pleasure to have you on the show to break it all down at a crucial time when market pricing is front of mind. Also front of mind is the geopolitics, which brings us to global leaders gathering in Vilnius, Lithuania for the NATO Summit. Bloomberg's Annmarie Hordern is on the ground. Annmarie.
Thanks, Kriti. A really historic day as we have Sweden overnight being able to have this path to join the alliance, with Turkey doing this U-turn. And I'm now joined by Finland's President, Sauli Niinistö, an architect, really, of both Finland and Sweden joining the alliance. You're one of the key diplomatic architects of this. You've been very close in terms of negotiations, obviously, of Finland joining, but also of Sweden joining. What do you think broke the impasse last night between Turkey and Sweden?
First of all, I don't feel like an architect. I have been working with all our friends to the same direction, so to get Finland and Sweden in. Now we have a green light, at least to some extent. And I have a strong belief that we will see Sweden quite soon as a full member. And that is surely important for us. What actually happened, we don't know yet, but...
maybe F-16s from Washington?
Maybe, well, we have heard rumors and also news that F-16s have been under discussion by President Biden and President Erdogan. That has been, in a way, at the table all the time during this more than 1 year's process. So, but wait and see.
With Finland and Sweden now both almost there in the in the alliance, you have almost an uninterrupted control now, NATO, of the Baltic Sea, barring potentially Kaliningrad. There's also the question about the Åland Islands. These are your islands. They are demilitarized, but there is a Russian consulate on these islands. And this is a place that Russia is able to monitor the Baltics from. Should this remain demilitarized now that Finland is in NATO?
Yes. First of all, how we see is that after our Finland and Sweden joining NATO, the Baltic Sea will be peaceful. To guarantee peaceful and peace for Baltic Sea countries, that's the idea. Then to Åland, we have to keep in mind that the demilitarization is based in Paris peace agreement after Second World War. And there are a lot of countries involved, so that would be an issue to open actually Paris peace negotiations. But the consulate, well, we have to keep in mind that there's one consul and his wife, nothing else in that consulate in Åland. But at the moment, question of consulates is very updated because Russia has announced that
they're shutting down your consulate in
they are demanding us to put down our St. Petersburg consulate. They have in Turku, which is actually serving the Åland small consulate, but in Turku they have a bigger consulate, and that would be well, similar than St. Petersburg. But we haven't made a decision yet. It's quite a new event.
But would closing the Åland Islands consulate be on the table as well as Turku?
We will see. At least Turku is clearly at the table.
And what do you think of the fact that polls in Finland, when you do the polling of your population, there's actually growing support to make those islands militarized instead of keeping it in this demilitarized treaty?
Like I said, it's a question of Paris peace agreement, and on the other hand, it seems that people in Åland are strongly against any militarization there. So we have to understand also that things have changed since 1940s.
Yeah.
You can now protect an island from outside. We have missiles, whatever. And on the other hand, Russians can very well control by satellites the island of Åland and, well, the whole Europe, actually. So things have changed quite a lot from those days. Mm-hmm. And this is one element we have to, well, keep also in our minds when we make decisions.
For the time being, Finland is not hosting any NATO troops. At some point, will you give your consent for that?
Well, you have to keep in mind that we are also negotiating with the USA about a direct defense cooperation agreement, and that would include some American presence, like in other countries they have a similar agreement. NATO presence is surely very important, but whether it is a permanent presence, that's another issue. It seems that, well, Finns don't see that as a primary question.
Putin has said that he isn't as concerned about Finland and Sweden joining NATO the same way Ukraine, if they were to, because there's no territorial dispute. But if there was changes in the infrastructure, he would respond in kind. Are you concerned about any blowback from Russia if you were to put NATO troops on Finnish soil?
Actually, we were expecting, and I was very careful with that last year, whether there are reactions from Russian side. None of them then. But like we discussed, now they are closing our consulate. Now they have started to put push on us. I do not, they are fully aware about how NATO is behaving and fully aware how Americans are, due to that agreement, cooperation agreement, behaving. So there's nothing new for Russians in whatever we do.
With the path now for Sweden, now given the green light by Turkey, obviously the big conversation here at NATO is what happens with Ukraine and their path forward.
Yes.
President Biden has said there's no unanimous consent amongst NATO members about Ukraine becoming a NATO member. Would Finland support Ukraine becoming a NATO member?
First of all, I think it's important that we have now already tabled one victory, that's the Swedish membership, and it gives an impression of united NATO. Yes, there has been discussion, And according to my understanding, there are ongoing negotiations where we could find a compromise, a clear, united statement on Ukraine to NATO.
About their path forward to become a member, or how their dialogue and protection is regarding the alliance?
That's another issue, and surely the path somehow will be described. My opinion is that we should give all the possible help for them to meet the conditions of NATO. Then the other issue is that they would like to have some kind of security assurances. We know that in G7 group, they are also discussing on that.
Yes.
And we, according to my knowledge, we will get more information in a couple of days from G7 too. So let's see how it will be formulated and what we can do for that.
I want to ask you also about what's going on internally in Russia.
Yes.
You've been dubbed in America the Putin Whisperer, but it's because of your years getting to know and having a dialogue with Vladimir Putin. What we've seen over the past few weeks, this halted mutiny by Yevgeny Prigozhin, and then reports that it's actually the Kremlin saying Putin then held almost 3-hour talks with Prigozhin. What do you make of this fracture within the apparatus of the Russian elite and Putin and his closest, what would have been his closest allies?
Yes. Well, first of all, it's amazing that something like that can happen in any country, and especially in Russia. That well, was it an attempt of a coup? We don't know, but nevertheless, marching on the capital with military forces, that's quite amazing. I have, well, not any better understanding what happened and what's going on, but you referred to the fact that Prigozhin and Putin have been at least very long, somehow together, maybe friends. And that might have an impact on Putin's behavior. Who knows? Well, it didn't seem to have very much friendship impact on Prigozhin's behavior.
Yes.
But yes, it raises question about leadership in Russia. But on the other hand, we haven't seen any clear signals that something would be going on.
Okay. You've also had a lot of access to President Biden. Last time we met in Washington, that was your 6th time in the Oval Office, which is quite a lot for a much tinier country, especially look at GDP and scale to the United States. Given the fact that you, out of all these world leaders here, you probably have spent the most time with both of them, Biden and Putin. And right now in America, obviously, we're gearing up for an election next year. And poll after poll continues to show that Americans are concerned with President Biden's age. What is your interactions like with him?
Well, I know him from a longer period. Before I was president, I met him first times. I think that President Biden is a man of peace, and that's a very valuable attitude in days like this, when we are all worried about developments worldwide. Ukraine is not the only place, and surely we have to look very closely. Russia, China, the BRICS countries, whatever is taking place. So this is my opinion on President Biden. On the top is that I consider him as a man of peace.
And he's headed your way next.
Oh, yes. Yes, he is coming to Finland after this meeting. We are continuing an old tradition, actually, that the 5 Nordics meet U.S. President. President Obama started it, and now we can continue it.
Sauli Niinistö, thank you so much for your time.
Thank you so much.
Kriti, that was the president of Finland, Sauli Niinistö, a key architect in terms of Finland and Sweden joining the NATO alliance.
Annmarie Hordern there with a crucial interview at a time when, of course, we are monitoring the NATO summit and the developments out of there. Geopolitics top of mind. So is the markets. Coming up, a look at some of the market moving events to watch throughout the day. Stick with us. This is Bloomberg.
Let's get you set up for your trading day and a look at what is ahead. NATO's annual summit is in full swing in Vilnius. We were just there speaking to the Finnish president. A press conference from Secretary General Jens Stoltenberg will take place at 10:30 a.m. Eastern Time. Then President Biden and President Erdogan will meet at 11 a.m. Likely top of the agenda is the jets negotiation, which is part of what Turkey wanted in order to approve that Sweden entry to NATO. Now, over in the U.S., a Senate hearing for the PGA Live Golf deal is scheduled for 10 a.m. with Live Golf CEO Greg Norman set to testify. Also, finally, the Sun Valley Conference will be kicking off in Idaho with some of the biggest names from tech, media, finance, and sports all gathering for the Billionaire Summer Camp. Kriti, what you looking at?
Yeah, a lot to digest there. You mentioned some of the big media moguls, some of the big tech moguls being at Sun Valley. Well, that brings me to Amazon shares and how they're trading in the pre-market. You're already seeing a little bit of green on the screen because at the end of the day, Dani, it is Prime Day, higher by about 0.5%. Traditionally does give the stock a little bit of a boost, but we'll of course see if that holds throughout the rest of the session.
Can I just tell you, some of these headlines came through on the Bloomberg terminal about Amazon suing the EU. Now, they've been sued after being earmarked for the Digital Services Act. This act essentially says that there are certain tech companies, Amazon being one of them, are big and systematically important. Therefore, there are more controls placed on Amazon and certain checks and due diligence they need to do. Now, Amazon, as a part of this lawsuit, has contested the label of a, quote, very large online platform by the EU. If they're not a very large online platform, Kriti, what is then?
Yeah, I'm excited to see the legal argument surrounding that one. Of course, that's going to be something that the EU is going to have to define, and that's going to go back and forth as well. But for right now, still not moving shares to the extent that I think we would expect. To the downside, though, Dani, we do have another name in the news. Uber CFO specifically resigning. Look, he's stepping down after a 5-year tenure that took Uber to its IPO. Nelson Che has not talked about timing yet, about when he's going to step down, but has informed, of course, the CEO and the team that he will be, something that the market is not responding to very well, down about 0.9% on those shares.
Yeah, I think this is one of the biggest C-suite departures since they went public, so definitely a big change there.
Yeah, a massive one. And speaking of departures, we got to get a quick check on Microsoft as well, because there is some speculation out there about whether or not they're going to go back and have another round of layoffs in addition to the 10,000 they've already announced in the last year or so. So those shares marginally higher by 0.1%, but again, that reporting not confirmed by Bloomberg just yet. So keep an eye on those big tech shares. That does it for early edition. Surveillance is ahead. We've got an all-star lineup. Jason Trennert of Strategist, Win Thin of Brown Brothers Harriman, and Brent Schutte of Northwestern Mutual all join the show. Stick with us. This is Bloomberg.